Dirty dealings, corporate battles, consumer woes. This is Evening 5. IHH Healthcare seeking as much as 5.7 billion ringgit in compensation from Japan's Daiichi Sankyo. The compensation estimate ranging from 4.24 billion Indian rupees to 109.3 billion Indian rupees is based on an expert report on losses suffered when Daiichi Sankyo prevented IHH from acquiring shares in Fortis Healthcare through an open offer back in 2018. In a filing with Bursa Malaysia, IHH said its indirect wholly owned subsidiary Northern TK Venture submitted a brief on February 6, accompanied by a report from its appointed expert, Osborne Partners. IHH said the upper bound of the damages of 1.093 billion Indian rupees is an increase from the initial figure of 20 billion Japanese yen set out in the November 14, 2023 announcement. The healthcare group added that in the February 6 brief reserves its rights to amend its claim for damages, including to add other heads of loss and or to claim the costs of the legal fees it is seeking from Daiichi Sankyo. The government plans to table an amendment to the competition law in the current parliamentary sitting to strengthen investigative and enforcement powers of the Malaysian Competition Commission. One key area under review is MyCC's current inability to appeal decisions made by the Competition Appeal Tribunal under the existing Competition Act 2010, said Minister of Domestic Trade and Cost of Living, Dato' Armizan Muhammad Ali. He explains that in contrast, the opposing party can seek a judicial review. Under the current law, judicial review would be the final avenue for the appeal for those found infringing the Competition Act. Additionally, the proposed amendments seek to introduce a regulatory framework to oversee mergers and acquisitions in the country. Armizan also said the MyCC is actively investigating 13 cases of alleged bid rigging involving 561 businesses and tenders valued at 2.3 billion ringgit. He did not provide further details but noted that the MyCC has been intensifying its enforcement efforts against bid rigging cartels since 2024. He stressed the efforts to combat bid rigging are crucial to ensuring that such practices do not undermine the government's commitment to transparent procurement governance. In September 2024, the MyCC announced penalties against 7 privately held companies for alleged involvement in a cartel to bid for 4 defence tenders worth 20 million ringgit. The Commission was also assessing complaints concerning 463 enterprises in tenders worth 9.27 billion ringgit. Lotte Chem Titan Holdings net loss widened to 510.1 million for the fourth quarter from 186.5 million a year earlier. This marks the group's largest quarterly net loss since its listing in 2017. The company attributed the higher loss to impairment of 940.23 million on property, plant, equipment and right-of-use assets. However, excluding the impairment losses, the group's LBT was lower at 174.8 million ringgit. LCT's revenue for the quarter fell 3.4% year-on-year to 1.79 billion ringgit. No dividend was declared for the quarter. The weaker quarterly performance dragged LCT's full-year net loss deeper to 1.18 billion in FY 2024 against 780.3 million in FY 2023. Revenue also declined 2.8% year-on-year to 7.44 billion from 7.65 billion ringgit. LCT President and CEO Jang Seong-pyo says that challenges persist due to ongoing uncertainties in the demand and supply of products and supply chain for petrochemicals, driven by fluctuations in oil prices and average selling prices. He adds that the macroeconomic environment is expected to remain volatile in the near term and that the key priorities for LCT in the upcoming year are to sustain operational sustainability and implement efficient cost management. U-Mobile must fulfill certain obligations under the shareholder agreement signed with Digital Nasional before it can deploy Malaysia's second 5G network. The process is expected to take at least 5 months, Communication Minister Fahmi said without elaborating on the obligations. However, U-Mobile may proceed with preliminary groundwork based on the detailed business plan to be approved by the Malaysian Communications and Multimedia Commission, he noted. Fahmi was responding to an inquiry in Parliament from MP Chong Zimin about the timeframe given to U-Mobile to launch the second 5G network. U-Mobile, controlled by Tycoon Tan Sri Vincent Tan, was selected in November 2024 over its larger competitors to deploy the second 5G network. Tan said in January that U-Mobile aims to deploy the second 5G network within 15 to 18 months. The official letter of award is expected to be issued to U-Mobile in February 2025, allowing the company to proceed with the second 5G network rollout, subject to the approval of the detailed business plan, Fahmi added. Northern Solar Holdings, which made its debut on the ACE market on Thursday, is looking to expand its footprint in Southeast Asia, according to the company's managing director, Liu Shunkai. He elaborates that while there are quite a few potential countries, they do not have a solid target at the moment. Northern Solar had a strong showing today, gaining 43% from its listing price of 63 sen. It closed out the day at 79 sen, which is 25% higher than its issue price. It was one of the most actively traded stocks on the bourse, with over 133 million shares transacted. Liu said that in the coming years, it expects to secure more solar projects and is targeting a 20% increase in solar rooftop segment revenue from FY 2025 onwards. The group will remain focused on rooftop solar, which it says can bring them the highest profit margins. As at November 19, 2024, the company's tender book stood at 1.8 billion ringgit. Its current tender book consists of 387 tenders for engineering, procurement, construction and commissioning, or EPCC, of solar photovoltaic systems projects. These tendered projects are still pending decisions from clients and, if awarded, will further increase its order book from 83.2 million ringgit. When asked about profit margin normalization in the coming years as China tackles solar module overcapacity, Liu stated, "Overcapacity is reducing material costs, benefiting us, and we anticipate slight growth in our profit margins."